Athens erupts in violence as Parliament passes deep austerity measures. The fate of Greece is now with Brussels as the country tries to secure its second big bailout. Futures are following European markets higher. I'm Alex Steele, and the morning call starts right now.
Good morning. Scott Rowe, the Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and we bring you Morning Call. Happy Monday, everybody. Futures are also looking for a good Monday. We have Greece agreeing to 3.3 billion euros of more cuts to secure its bailout. Is this up open positive for traders, or is it actually pretty confusing?
I think what it does is it keeps things in line, the same exact composure that we've had, which has been a bit tricky because there hasn't been a real pull-in since the market ignited on December 20th. You know, we've talked about here how strong stocks actually follow their 10-day or their 20-day moving average. But since the December 20th gap and go, the indices have been acting like a high beta stock where not only have they been following these extreme moving averages, they've been extended from it. So on Friday, when the possibility of a hard default came into play, we had our first test, and the markets didn't even go or close below their 10-day moving average.
So then what do you do today? Because you could argue that those who are shorting into the weekend now have to cover. Perhaps this might be a good opportunity, though, to take some off the table if you didn't get that chance on Friday. Or do you want to jump in and add because you don't want to miss the move? How do you balance that when we still don't know if Greece has really secured its second bailout and when we have a lot of economic data this week?
It's not easy, and I've been trying to hold 8 to 12 to 15 different long or multiple longs, and I've had hedges. And on Friday, I would say most prudent traders probably took back some of their risks, saying, you know what, maybe this is day one, maybe this starts a little bit of a retracement. I started hearing a lot of people talking about 2 to 5% correction is in the cards, and we've been trying to put levels to watch to see how it unfolds. So if you look here at the S&P, you will see that ever since, first of all, you had the October reversal low. I'm not even going to start talking about that. Ever since this December 20th gap and go, which broke us above this descending trend line here, we've had a nice methodical ascending channel to the upside. Every test we've had, we've passed. Every time we've pulled in, we've held. Came in, pulled in, held. Here was the actually a longer floor that the bears couldn't break, and now we're all the way up here. So this little day was Friday's drachma drama, and all we did is go into the 10-day moving average, and then the composure didn't even change because not only could they not close us on the lows or close us below, we came off the lows, and at the same time the VIX, that's been a very good telltale, came in hard the last 30 minutes, showing you that the market's just taking everything in stride for now.
But how overbought, though, are we? I mean, I was reading a technical note from the chief technical strategist S&P Capital IQ, who said we're looking for a 3 to 5% pullback in the next couple weeks before that next leg higher. I mean, when do we get that? That's still a risk, right?
Well, what happens if we don't get that and we go to 1370 first? That's what traders are going to have to talk to themselves about and say, how do I handle this? Because if you go back to this chart, if we get a 30 to 60 minute close above this recent resistance, which is about 1350 to 1354, the next real level is going to be 1370, which is last year's high, which is right around here. Now, to talk and address your question, which I didn't answer, about how overbought we are, the McClellan oscillator, which I follow, which is a tool for whether you're overbought or oversold, went from plus 70 to negative. So we just worked off a lot of that overbought nature of the market. So I know the RSI is still high, and I still know that we're not as in line as we should, but the market did some work and we held that floor, and we can continue. So just don't have an opinion that we have to pull in 3 to 5%, because we might not.
Now, talking about individual sectors, would you say that tech is the most overbought if you had to pick one, or is that actually the one showing the most strength that you have the most confidence in?
That's funny. You could spin it two ways. Like
totally.
The bears say, oh, it's overbought, and then the bulls could say it's showing relative strength. So if you look here at the Qs, you will see the Qs didn't even come in and test that 10-day. Like here's the 10-day, which I just showed you the spiders came down and touched or tried to touch. Look at the Qs here. The Qs did not even get down there. So the Qs have been showing relative strength the whole way. There's been leadership there. If you look at ever since we broke above this 60 area, it's been nice and methodical. And I know that it's somewhat of a straight line going higher, and we could come back and retest, because usually you do that, so you don't want to chase. But if we don't, the next real resistance is a lot higher here on the Qs. You almost have to go back to your monthly chart to see where that is, and that's really up to about 68 to 70. So just be careful.
Be careful about saying overbought too fast.
Right.
But you have to be flexible with this, because if we do wind up getting a pull, and do you expect tech to maybe be the worst decliner?
Well, either that, but also the sectors showing more relative weakness, they usually go down first. The ones showing relative strength usually hanging tough. But again, if they're extended and you're high on a perch, you break that perch, you could fall far below. So just don't get ahead of yourself. Don't put on too much risk. And the key to staying with it is just know your time horizon and keep watching the composure. And right now the composure is strong.
So what's the sector that you see showing the most relative weakness?
Well, let's go through a few of them. Let's see the XLI, for instance, and I'll show you the difference here of where it is versus the Qs. Like the XLI, if you look here, it actually went and tested the 10-day and it held it, whereas the Qs didn't even get there. So did this show a little bit of relative weakness versus the Qs? Yes. Is it something that you should be really overly enamored with? No. So that's why I think we go through these sectors and look.
And that also could have been from the Chinese data that they imported 15% less in January than they did in December, and I mean from a year ago, excuse me, and that could have really dented the industrial group as well.
Yeah, and then everyone says now that the banks are going to turn lower, but if you look here at the XLF, the XLF didn't really have anything crazy as far as technicals, except for here you go, we're at some really big resistance. Okay, you've had a nice run. We've been holding this uptrend the entire way, and we're still, we held the 10-day just like the other indices, and it could come back down to this 14 area, but I think the banks have been very impressive this year. The likes of JP Morgan, Wells Fargo, Morgan Stanley, and we saw on Wednesday of last week, Goldman couldn't get through that 117.50, which has been a good barometer for us. So just shows you that you can't chase these things, but buying them on dips, and when they have that tight pattern, that's when you go for some cash flow.
Two more sectors I want to touch on very briefly. The OIHs here, I read a note over the weekend, Scott, that said if we do see an EU embargo of Iranian oil, that Brent could actually hit 130. That's actually different from what I hear from a lot of traders at the NYMEX, so it was a little surprising to me. But for now, oil's still range bound, and I wonder if the OIH is still too, waiting for some kind of breakout.
As oil's been range bound, the OHs have been slowly, methodically moving higher. And you can't be in everything that just is fast and furious. For me, I've been holding these OAHs since the end of December. It was a nice accumulation pattern. If you look here at this pattern, I talked about it so many times, that inverted head and shoulders pattern where here's the left shoulder, here's the head, here's the right shoulder. And we've had two different strategies. This was your tier 1 accumulate, and Jim Cramer went over this very well. Once it crossed above this downtrend line, this was your tier 2, and now we're knocking on the door, just like a lot of sectors, right into this long-term resistance. I'm not sure how long it's going to have to stay here, but I'm in tier 1, and if this starts to get above 131 with some type of volume and the market wants to get going, you could see a quick move to 140, and the measured move of this pattern at a later time this year is north of 160. I would stay with this, as at least a tier 1 for macro investors.
Now, what about the home builders? And I highlight this because we have a lot of data coming out this week, building permits, housing starts, we have a more housing market index coming out. So with expectations actually pretty high for these numbers, do you think that a positive catalyst is baked in here? How would you be playing this?
Well, this sector's been so battered and bruised and took a lot of people by surprise this year. Like we talked about how, you could get a January effect type play here, but this has been such the movement has been so strong that, we've even talked, Alex, how this could be a leading indicator for the economy, that typically sometimes the stock market goes 6 to 9 months before the actual economy. Now, if this move in the home builders is indicating a rebound in housing, that means the economy gets better. That means the consumer gets a lot of the money back. They feel better, they spend. That makes, that Barron's thesis about Dow 17,000, it could come into play in the next 2-3 years, and I'm a believer of that.
I knew you'd work that in there. All right, did you show the chart? Let's just look at the chart really quickly.
Okay, XHB, if you look here, it's been really impressive. A lot of different buy areas, and this was the most recent. So here's your last flag. As you can see here, it didn't even test a 10-day. It's so pulled in methodically, just like the rest of the group, so it's acting really well. I would say, is there a chance that it could retest this uptrend here and C19? Yeah, why not? But if it doesn't break below this flag pattern, you have to watch the upper end of it. Yeah.
All right, so that's the sectors you want to look out for. After this break, we're going to talk about the stocks that you need to watch out for as well. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, welcome back. So we're going to go into some individual stocks you need to keep on your radar. So I'm going to go with Apple because I'm assuming that's the big one that you check out when you're looking to see what kind of direction you're getting from the markets.
Yeah, last year, well, every year Apple has been on an amazing run, and last week while the markets were trying to, correct, this stock could not be stopped.
You can do it. It's Monday. You can get it out.
There you go. So the question is, with option expiration on Friday, people are trying to say, oh, everyone doesn't want it to go above 500. What I typically see is what they'll do is they'll push it above 500, maybe even to like 520, get people to buy some of the strikes a lot higher up. And then if they want to pin it at 500, they could do it, but it's Friday. Let's not start talking stock options like many people are tweeting to me about. Bottom line is, if you look at this chart, it's been an unbelievable move. We talked about the methodical buy. Here was that gap up in earnings. This is when I said you could get involved right around this 449. Here's when it broke above this high for momentum, and a big move. So you have a 2-day little pivot above 497, which we're opening above, and you're going to see it flirt with 500 today. The question is, do they push it through by how much, and can they hold it above 500 and not just get a headline?
And if they can't push it through 500, or if it goes but then can't sustain, do you want to sell a little bit, tear down?
Depends where you own it from. If you're a macro investor and you're in Apple and you have a few year time horizon, just stay in there. If you're a trader, it'll be a little bit shaky because it has come very far, very fast. I know I'm long some. I've been in and out of it. And I'm hoping that it can go to 500 to like 504, 507. Then I would sell some, and then I'll just use it for cash flow intraday, and we'll see how it goes.
And I know we spoke about Goldman Sachs earlier, but what's your line in the sand on the low end to sort of get interested?
I'd like to see it hold 113, do a little sideways action. If you look here at Goldman Sachs, it couldn't get through this 117. This little box is pesky. It keeps, here's resistance. It tried to go, but after a huge move from the lows, it just couldn't get through. This was when you had your macro buy when it broke this downtrend on earnings day. And now, I would say it would be healthy if it could stay above this 113, go sideways a little bit, and then try again. So maybe be in a tier 1, or just wait for the momentum to come in and wait for it to get above that 117, give you a 30-minute commitment, and then you get your 120 to 125.
And we spoke earlier about the industrial, so then where does that leave, say, Caterpillar, down about 1% on Friday? Again, I bring up the Chinese import data, down 15%.
Well, Caterpillar was with that group. I was looking at that group. I'm like, it looks like it could break above the highs, and I went after it early. I didn't follow some of my rules, and it pulled off. And now if you look at Caterpillar, it's still fine. It's still taking it in stride. What a good stock this, in the past year or so, even more. This is when we talked about it with Stephanie, if you remember, when it broke above here for a buy, then it broke above this range. Okay, this was another buy, and now it's going sideways. Just hasn't had enough time to break out. This was a day we got a little bit excited, me included, and I apologize for that. It couldn't go through. And now it gapped down on Friday but came off the lows. So I would say if you're a momentum trader, stay long versus this support here. As long as it stays above this 108, 110, I think it builds another higher level consolidation. And then at some point this year, it's going to break above these highs and give you that momentum we just weren't able to get last week.
And then two other stocks we want to highlight, and they're tech stocks, IBM and Intel. IBM was one of the names you said could make new 52-week highs. What kind of relative strength are you seeing?
It wasn't ready, just like the market, but it's still hanging around. Look real quick at IBM. This stock regrouped after earnings. A lot of people thought, including me, that it might get into a little trouble after its earnings. At this point, you have two. This is the resistance. This is identified now. 194.5. This is where if you're short and you're a bear, you're trading it against, because if it closes above this, it could continue. Here's your high end of the range. I would say guys not committed could use 190, 191 as a stop, but I still think the stock is fine. It might come back and retest this support. So here's, support 1, support 2, support 3, and there's your resistance. And if IBM were to get above 194.5, it'll help the market move a lot higher quickly.
20 seconds Intel. Can we hit that?
Yes, let me just show you the chart, because this one has been acting really well too. Nice tight pattern here. I think at some point it's going to get above this 27 and go. If you're a macro investor in Intel, stay the course.
All right, we have some other quick ways we want to highlight for you. Maybe you can make some cash today. Netflix not participating with these other tech names. So we had reduced earnings for the fourth quarter, down 14%. They rejiggered this on Friday. That's after they settled allegations that it violated customer privacy laws. Really got smacked, right?
Well,
or just changed its mojo, I guess.
if you remember
Sorry.
earlier in the week, we did that little red dog reversal. It pushed through 130.50, came back below. Even before this news, that was a sell signal. That was a take profits, especially after a move from 75 up to there. If you look at the chart pattern, I use it as a day and a half trade. You know, I got short right around here. I covered into 125s. I would say watch this level. If people are upset with this news and this thing gets below 121, 122, the next level is going to be 118, and then you have the gap here. But if the shorts push it and it can't break below this support here on that news, you better watch out and look at this inside range, because if it then starts getting back above this 127, it can continue. But this is very sloppy here.
Yeah.
If you had a big majority of this move, I would say get on the sideline, and traders will trade against this inside range.
And you could argue that a lot of the short covers already happened, so maybe they're
Yeah.
looking to reinitiate positions also.
Yeah, or unless they've rolled it up and they've gotten already squeezed, because from
Right.
75 to 130,
Right.
big move so far this year.
All right, so let's go to Amazon. Held up okay on Friday. Could be a catalyst here. Could launch the 9-inch Kindle Fire by the mid-2012. It wasn't so terrible on Friday.
No,
At all.
If you look at Amazon here, it broke through this little mini area. I would say today it's trying to get above this mini pivot here of about 189. You know, if it does get through there, this is your next area. But I would say longer term, I've been looking at this chart. That's why you have all these little lines here. I would say if you want to be long this stock, trade it versus 170. But if 170 were to break at some point in the next 4 to 6 weeks, you could see 126. So be if you're an Amazon believer, also believe in this 170 support. If we break and close below it, just take a little care.
Talking about stocks that also did well on Friday, we got to go LinkedIn, up 18% on. That was positive earnings, beat profit for the fourth quarter, and a good outlook. Totally different from like the Groupon story, for example. Is obviously that you missed the big bump. Now what do? Do you sell?
Well, it
Take
all
some
depends
profits.
on your time frame. Now that earnings are out of the way, and you have Facebook coming out in the next few months, they're going to want to keep this in the game, because that'll help with the Facebook valuations. I took calls with a lot of guys from my community into this earnings, and unfortunately Friday was such a crazy day that I mismanaged them. I sold my calls when the stock was 83, 84, never went back long, missed the opportunity. A lot of guys did the same, but SH, you know what happens.
Right,
and it
that's how it
did.
goes.
So at this point, it closed strong. If you look at the chart here, this was that downtrend that we were outlining for you. It, nice gap and go. I would say 94 is resistance. Maybe it hovers here for a while, but then if it hovers for a while, I'll be a buyer through 94, because the next area is going to be 100 to 105. Big volume on Friday. The stock's in the game.
All right, let's go to Las Vegas Sands. I don't actually think that we've hit this since they reported earnings, if I'm not mistaken. So earnings climbed 36% in the last quarter. That was in line. Revenue climbed 26%. That was above analyst forecasts. Las Vegas, which accounts for only 8% of Sands earnings. I mean, that's 8% is not bad, considering that we got some sort of negative Nevada Gaming Control Board reporting casino revenue. Was that even a sentence that made sense?
That's a lot.
Yeah. Casino revenues were up only 3.6% in Las Vegas Strip in December. That's versus 9% in November.
Stock is acting well.
But anyway, what's the stock doing?
It's acting well. It's trying to break above that 50, 51. On the macro chart, it looks unbelievable. I think if you're a macro investor, stay the course. You probably see something north of 60. Here's the chart. Here's the monthly chart. If you look here, it's just getting above this major resistance. So if it doesn't, and if it stays above this and the market stays strong, you're going to see $70 to $80. If you are a momentum investor, all what you have to do is make sure it stays above this 50, 30, 50, 50. I would stay long, and then at some point, if you can get back above this recent high of 53.30, it continues. So just know your time frame here, but overall it acts pretty well.
And then wrapping it up, Scott, I just wanted to get your take on what's the biggest thing you're going to be watching this week, aside from the price action. We got a lot of data.
Well, the price action is typically what I watch, and how I think today's important. I think
Okay.
now that Greece is somewhat done, so to speak, just ish for now. You want to hear a few things. One, they're saying, are there any Me Too's out there? Who else wants to get haircuts? Who else wants to get the same type of bailout that they have? Whether it's Portugal, whether it's Spain, whether it's Italy. If you don't hear rumblings about other countries, I think that's positive. If the bears try and sell the news, saying, oh, now that Greece is done, sell them, which they might try and do. If they can't do it, that'll also be interesting to composure moving forward, because if we open up today up 8-9 handles and we close negative, that'll contribute to the sloppy action up here, and then that'll strengthen the bears case for a bit more of a pull-in. So I think today is important. We don't have to close on our highs, but I think if we hold more than 50% of today's gains, I think more and more people are going to get a bit more confident and start adding back some of that risk that they took off Friday.
And I'm actually going to be watching some inventory data that we're going to get, because if the inventory rebuilding wasn't as strong in the fourth quarter as originally thought, what I've been hearing from reading some notes from Deutsche Bank is that that's actually going to be brought forward again in the first quarter of this year, which provides continued strength for the economy. Just throwing that out there.
There you go.
Okay, that's it for us for today. Happy Monday, everybody. I'm Alex Steele from The Street.